about earnings, one of the key takeaways really from the first quarter numbers were that if there were companies with aggressive capital expenditure plans, these will now be put on hold. What are the sectors or the stocks that you think will be worst hit by that slowdown?
I think that's very obvious. You have capital goods, you have real estate, you have engineering companies, the infrastructure companies, which are going to be in some pain. So apart from that, I think the consumer goods, I think we call them defensive, but I think the pricing, the stocks are not very cheap either. So I think it's a time to step aside or make your wish list and buy them in doses over the next 12 to 18 months.
What is on your wish list in these markets?
Well, I would look at the market leaders in most of the sectors. I would pick companies which I think will stay there for 10 years at least. And I would pick on them. Small cap companies I don't like, because you might make a 10 out of 1 or a none out of 1. So I don't like to gamble that way.
I was asking this question to Pradeep Baijal earlier today as well, and this is just a follow-up to what Shruti was asking earlier. What do you think is the real reason behind which government is pushing reforms the rate at which they are? Is it just because that the left is not there and they have to prove a point because that is the mandate with which they came into this government promising reforms? Is it just that they want to signal to the market that they are actually backing the overall economy picture right now, and so they're actually, pushing this agenda? Or do they need the money to overcome some of the fiscal deficit situation that they are encountering right now, which is only getting worse with every passing day?
I would think that, see, the first 4 years, it was not that the left was blocking any reforms. No reforms were ever tabled and it was put to test. This is suddenly now with elections nearing, I think there is a feeling that the dream team has not done much in terms of reforms and everything. So there is an effort to push it through. I hope it goes through. It's good for all of us. It's a tough ask given that we have a very limited time. But assuming that Congress and the alliance is in favor, and BJP has been also one of the votaries of reform. So if everything is coming to the floor, logically things should go through.
But what about, see, on the IPO front, you have pretty much some clarity. NHPC has filed already. Oil India will probably file in the due course. BSNL, I'm sure the telecom ministry will do all that it can for this IPO to go through. Whether it does not is another matter. But what about the other issues like FDI, particularly insurance and retail? Single brand is already taking a second look. The Banking Act, the Banking Amendment Bill. You think that in a limited 8-9 months that they have, that all this can actually be pushed through with reasonable degree of success?
I think if an honest attempt is made, it can be. Maybe not all of it. Maybe something like the banking might not go through. But insurance is a very simple thing to take from 24 to 49. It's not a big thing. I think, so you can have, some of the things can be achieved. And I don't know whether every one of those reforms need parliament approval.
Meanwhile, the markets are just a few seconds away from closing. From where we are positioned currently, we're 1 point higher on the Nifty. The Sensex is 30 points higher. That will adjust over the next few minutes, or the next 3 or 4 minutes as the markets actually die down. And we have, I think, closed for the day as well. The metals index will close with the biggest honors, as will the capital goods space, 1.5 percentage points higher for those. IT and real estate were down about 1.5 percentage points between them. So that was your push and pull impact. ONGC on the way up and Kane on the way down stand out from the oil and gas space. We were discussing with all our guests earlier as to what that overnight recommendation from the Chaturvedi panel may mean. But so far it's being read beneficial for ONGC because of subsidy burdens probably coming down. 4% higher for that stock on closing. Kane will close 5.5% down. Cipla, Dr. Reddy's have had a good day. Healthcare on balance, they were up about 3 to 4%. From the banking fact, HDFC Bank and ICICI Bank were up between 1 to 4%. HDFC as well up about 1%. That's pretty much where the good news ends. Cement was smashed out of shape. Grasim, Ambuja, ACC down between 2 to 4%. Infosys, Satyam, Wipro are down between 1 to 3% between themselves as well. And if you look beyond the index, you have stocks like Noida Toll Bridge that will close 20% higher. You have Asian Electronics that was relatively active in the early part of trade that closes about 11.5% higher. Sesa has closed roughly about 6.5% higher. RNRL as well. On the way down, IDFC is looking soft by about 2.5 percentage points. Shruti was just mentioning JP Associates about a couple of percentage points down. And for the week, the Sensex and the Nifty have closed about 3.5 and 2.5 percentage points up respectively. Bankex has been the biggest outperformer, up nearly about 10%. And apart from that, real estate as well, up about 6% for itself. And the auto index will remain flat. So that's how the interest rate sensitives have done for the entire week. And ours has been the best performing market this entire week by a broad range. Was this pretty much expected? Were you picking this up on the future side?
Absolutely, but the trend, Rahul, still seems to be for a softening towards the end of the trade. After, if you look at the advance decline ratio, after it's been in favor of advances for pretty much all day, suddenly in the last 30 minutes of trade, you see the declines picking up. At closing, there were 575 stocks that were advancing on the NSE. This is to 633 declines.
You surprised with this kind of outperformance that we've shown over the last couple of weeks, or was it coming?
I am surprised.
You are. Do you think it will continue is the next obvious question.
I have no idea. I think that's a tough ask, because I think the liquidity in stocks is something which is not explained by what is happening on the ground. All I can understand is the weak hands have got out of the market. So probably if you have enough liquidity, you can move stock prices.
Bala, you said earlier that you like the frontline stocks compared to the broader markets. If you look at a stock like State Bank of India, it's seen a sharp pullback in the last 1 month, offered decent returns if you got in at the lower end of the price band. How would you play that counter?
See, I wouldn't like to talk about bank specific, but I think I divide the buckets into two, PSUs and private sector banks. Right now my pick would be the private sector banks, because with government action across every sector where there is ownership, it's a worrying sign. What kind of taxes, what kind of price controls are getting imposed, what kind of loan write-offs, everything. So I think those kind of sectors I would stay away till the government is very sure about what it wants to do.
There was talk today in the cabinet meeting about a possible disinvestment and perhaps listing for Punjab and Sindh Bank. How bullish are you on disinvestments by the government, and what kind of timeline do you think we'll see them happen within?
I think disinvestment is, while per se it is a good thing, the problem is I think whether the market conditions are right for that. I'm not very sure about that. Unless some public sector institutions are arm twisted into subscribing, I don't see them going through in these kind of market conditions.
How are you calling crude now? Do you have a thought on that?
I don't have a thought on that, sorry.
How about media as a space? We were discussing that with Ashu. Stocks like Dish TV, WWIL, Ad Labs, they've been relatively active. Is it worth a look, this entire sector?
See, to me, the media stocks is something more of a concept stocks at this stage, because I look at the cash flows, I get really scared, and when I talk to an analyst, he says it's trading only at 13 times 2014 earnings. I think I would rather wait for 2014 and see them and buy.
What about cement as a space, Mr. Balakrishnan? Even though I'm looking at some of the data handed to me, Grasim has closed about 11% higher for the week. ACC has closed about 10% higher. But the fact is it's come under pressure significantly over the last couple of days. How are you viewing the operational metrics?
See, operational metrics, the last 2 years they had a fantastic run in terms of the kind of profits they made. Because I have not seen any industry where a capital intensive industry where in 3 years you recover the cost of the entire plant, which is what cement has delivered. So at some stage these profits will start to cool off. So in that perspective, probably I would be neutral to that sector at this moment.